Welcome to the Spark Accounting Solutions show. My name is Jennifer Quinn. I am the host. I'm super excited to share with you the 5 things you need to know about the new tax law for 2018. Good news, I'm not doing it on my own. I actually have someone qualified to talk about this. I have the founder of Spark Accounting Solutions. She is a CPA, CFM, QuickBooks Pro Advisor, and Profit First professional. Like, her designations, there's even more. I can't go into it, but I can bring her on. So please join me in welcoming to the show Julie Babcock-Hyde. Hello, Julie.
Hello, happy spring.
I know, right? That's kind of exciting.
It is kind of exciting, and the sun's out today, so here anyway. So it feels like it might actually be spring.
That's always good. That's always good. So I have mixed feelings about today's topic. I'm not going to lie. As a small business owner, of course, I want to know what the tax laws are. And because I didn't go into business to know about tax laws, it also hurts my head. So that's why I'm glad you're here to break it down.
Well, I'm hoping that today we can go over kind of the top 5. Some of them are misconceptions. Some of them are just things that you need to know about because they might benefit you for this year. And just to make sure you've got a list of questions to ask your tax professional about because the rules are changing, and it's important that you really understand the potential impacts. I don't ever expect a small business owner to understand the tax law. I just want them to know kind of the questions they need to be asking of their tax professional so that they can minimize their tax liability.
Okay, that's good. So that's a great mindset to go into this with. Make sure you know what to ask. You don't have to memorize all this. You can take notes, but that will just help you when you are talking to your tax professional.
That is correct.
Perfect. So shall we jump in?
Let's hop into the first one. And this first one is a big misconception.
Okay.
So everybody thinks that the Affordable Care Act provisions are all gone. There's no problems anymore, and that is not technically correct. So what you need to know for 2018 is that there is still potentially a penalty for not having minimum essential coverage as defined by the Affordable Care Act. And that's a surprise for a lot of people because they thought it was gone. A lot of people thought it was gone for 17. They definitely thought it was gone for 18, but it's really in the current law that's in place. It's not gone until 2019. So if you don't have health insurance for this year, you can't necessarily opt in now because open enrollment period's over unless you have a special qualifying event. But one of the things, and I'm not necessarily recommending for this for you, but I just want to share that one of the things that some small business clients have been looking into is some of the medical health share programs that are kind of an exemption. If you participate in one of those, you have an exemption to the penalty. So that is still an opportunity that you can look into for 2018 if you didn't know about the fact that this penalty is still around.
Okay, all right. That is good because, it's gone, but not till 2019.
Exactly. And most people thought it was gone for 2017. And so when they're seeing that penalty on their taxes for 2017 taxes that they're doing right now, they're getting surprised. And so if they're surprised now, I don't want to know how surprised they're going to be next year if they get hit with it again. So,
okay, good to know. Ask your tax professional about that. Okay,
yes.
So let's go on to number 2. The new corporate tax rate is 21% for all corporations.
Yes. So we used to have a graduated tax rate that started at 15% and went up to 35%. And so they came in, and so all corporations, so this is anybody that's taxed as a C corporation. In general, they're going to file a Form 1120 corporate tax return. The new tax rate for 2018 is 21%. So some of our businesses are seeing a significant decrease. If they were up in the 35% bracket, now they're coming down to the 21%, they're going to see a significant decrease in taxes. And we probably... Yeah. Have you seen any of the news reports of businesses that were giving raises or giving bonuses out to their employees to kind of share in the savings?
No, I haven't, but that's awesome. So what do some people, though, wonder if they need to change their filing status?
Yes, yes, that is a good thing to kind of look at this year.
Okay.
But as they were passing this tax law, they also kind of figured out that they were giving a real benefit to the corporations and maybe not to some of the other entity types. So it is a good time to decide what entity type you could be. You know,
Okay.
the IRS has got S corporations, they've got C corporations, they've got partnerships. We've got different ways that you can be taxed depending on your underlying entity type. And it's definitely a good time to look at that. But it also takes us into our next point, which is the Congress did figure out that they were giving this benefit to the corporations and worked something into the tax bill for the other entity types. So
And what is that?
let's go forward to number 3, which is our 20% qualified business income deduction.
Okay.
So once they figured out that they gave this awesome benefit to the corporations and people started, you know, the news was, oh, everybody's going to become a corporation now. They realized that what they had done. And so they came up with this new 20% qualified business income. So if you are taxed as a sole proprietor or as a partnership or as an S corporation, there are ways that you can deduct 20% of your qualified business income. So let's say you're a sole proprietor, you have $100,000 of revenue, you have $50,000 of expenses, you've got $50,000 of net income. You're going to get a 20% qualified business income deduction off of based on that $50,000 of net income that you have. And that's a deduction from taxable income. It's not an itemized deduction, so you don't have to worry about whether you're going to take itemized deductions or standard. It's just a deduction. Now, of course, it's the tax laws, which means there's exceptions, right? Because the tax law is not a tax law if there are not at least 3 or 4 exceptions.
Okay.
So one of the exceptions is that 20% deduction. It's the lesser of 20% of your qualified business income or your taxable income. Okay, so there's gotcha number 1. Okay. Gotcha number 2 is if you make more than certain thresholds, you have additional hurdles you might have to jump over. So if you are married filing joint and you make over $315,000, you may have some additional hurdles you need to jump over. If you're up at $415,000, you may have even more. There's some phase out stuff that could happen. And there's special rules for certain professional service businesses. And so the one that I'm the most familiar with, obviously, is accountants, but it also applies to doctors, performing artists, and there's a list of these. So I think the important thing to know about this 20% deduction is, number 1, that it exists. Number 2, that it's complicated and there's rules and phase outs and exceptions around it. And number 3, you should ask your tax professional about it and see how it's going to impact you for next year.
Okay, what I love is that one of the most important things to know about this is that it's complicated. So yeah, this is the good place to take a note and say, I need to talk to my tax professional about this specifically. The 20% qualified business income deduction.
Exactly.
Yes. Okay, perfect. All right, it is confusing, I'm not going to lie. So let's move right on to number 4, which is increased Section 179 expanding. First of all, what is Section 179?
I can't believe you don't know that.
I know. It's like
I laugh when you listen. I'm in obviously some accounting groups, and like there was a whole post that was just like section codes, numbers, and forms and everything. And somebody posted, and they say us accountants are hard to understand. Well, okay, we are sometimes.
Well, you are. And the good news is every industry has their own lingo, right? So,
yes. Exactly. So let's start out with what Section 179 is.
Okay.
So generally speaking, when you buy a fixed asset, you have to depreciate it, which means you actually take the expense over time. And in our tax code, it's got specified lives for different types of assets. It could be 5 years. It could be 29 and a half years. It could be 39 years. There's a bunch of different lives that it's assigned to it. And so generally speaking, you're not able to deduct something totally in the year you buy it. comma, but it's the tax law. So there's always an exception, right? So one of the exceptions is this Section 179 expensing. Section 179 allows you to expense something in full in the year that you bought it. So in 2017, the maximum Section 179 deduction was $500,000. So if you bought a dump truck and you bought some other equipment, in total, you could expense up to $500,000 of that. So the nice news about that for 2018 is that they've increased that to $1 million. Now, there's other rules around this. There's only certain property that qualifies. So like with most things, I'm going to tell you, if you're thinking about taking advantage of this, talk to your tax professional, understand the rules, understand if what you want to buy is going to apply. Because you don't want to spend a bunch of money with the intention of getting this deduction and then not qualifying for it. So make sure you understand it. But there's some other good news around depreciation in this new tax law as well that I want to share with you.
Tell us good news. We love the good news. What's the good news?
Good news is beautiful. So in addition to Section 179, they've also expanded bonus depreciation. It's another way to accelerate your deductions on your assets so that you don't have to take it over 5 years or 7 years. Maybe you can get more of it in the current year. And we've actually got some options for 100% bonus depreciation in 2018 as well. So the theme of my conversation around taxes is always talk to your tax professional, talk to them about what you want to do, talk to them about your options for expensing things, and really work on a plan. And the important thing on this stuff is not to do what you're going to do and then talk to your tax professional. It's to have that conversation first, because as tax professionals, we have opportunities to help you structure deals in certain ways that you're going to get the most beneficial outcome. But if the deal's done, there's no changing it. It's already happened.
Yeah, makes sense.
So include us up front on all of this stuff so that we can really get a good idea about the potential impact for you and the potential savings.
Perfect. That's great advice. If you get nothing else from this show, underline that one. Talk to your tax professional before you negotiate the deals, because there might be more that you don't know. You don't know what you don't know.
Exactly. It's very true.
All right. So are we ready to move on to number 5, or is there more about the lovely 179? What?
Let's do this.
Okay. All right. Okay, so technical corrections and regulations. What do we need to know there?
I think the most important thing for everybody to know right now with this whole tax law is that the law has been passed. Typically, after a tax bill has been passed, they look at the tax bill and start going, oops, that did some things we didn't necessarily mean for it to do. And so what typically happens is that there will be a technical corrections bill. A technical corrections bill will go back and say, hey, we said this, but we meant this, and kind of get things back to the way they really meant for them to be. And so the thing to know about this technical corrections bill, along with everything that's going in, without getting into any political comments, I think we know that getting anything done in the government right now is hard. So we have no idea when this technical corrections bill is going to come out. Just a fun fact as far as the timeliness of passing tax laws right now. In February of 2018, our government passed a tax law retroactively changing 2017's tax code that didn't apply to 2018, it applied to 2017. So the only way to take advantage of those particular tax code items is to build a time machine, go back in time, take advantage of it, and then come back and let your tax preparer know that you did that. So,
wow.
So I think the frustration level for taxpayers and tax professionals is kind of high as far as getting things, knowing what the rules are right now in a timely basis. So I guess I just want to share this technical corrections bill is probably coming, but we don't know when. The other thing that is coming, so the Congress passes the law, and then the Treasury Department comes in and issues regulations about what the tax code actually means and how they're going to apply it in real life. We do not have those regulations yet. And so there's a lot of people that are saying this is how it's going to be or that's how it's going to be. One of the big conversation pieces right now is whether or not business meals are still going to be deductible in 2018. Believe it or not, that's a big deal. There are well-respected tax professionals, certified tax professionals, EAs, CPAs that are saying they are not going to be deductible. We've got other ones saying they are still going to be deductible.
You do realize you just struck panic in the...
Oh, I know.
Yeah, for all small business owners.
So,
like, what?
So they changed the law and said entertainment is no longer going to be deductible. But right now, the business meals and the entertainment are kind of intertwined in the law. So they've thrown out half of it, and the question is, did they throw out the other half of it? There have been members of Congress that have come back and said, no, that wasn't our intention. And we're expecting to see something to fix that in the technical corrections bill. But we can't count on this stuff until we know for sure. So,
well, and as an accountant, as a CPA, what do you do with this information? It's March 21st. It's not like, we've got this timeline that we can just wait and see. Like
exactly. Yeah. This goes back to the frustration level for both taxpayers and tax preparers in knowing on a timely basis what our tax rules are. And right now we don't. When we are changing tax rules in 2018 for 2017,
right,
and we're still writing the regulations for 2018 rules when we're almost a fourth of the way done with the year.
Right.
It's interesting times in tax land. We'll just say that. So
interesting times in tax land. And it sounds like this is a whole different topic for a different show. Interesting times in tax land. Like,
yes.
What? And to be honest, as a small business owner, we don't know this is going on. Like, how would we know unless we're tracking it intentionally?
Right. And it's hard as tax professionals to even give you an update because we've got respected professionals in our own industry saying yes and no, and we're still waiting for regulations. So we can't even say, well, this is what the rules are going to be because we don't know yet. So hold on to your hats. It's going to be another wild ride this year, but hopefully we'll start seeing things coming out and getting clarification around how a lot of these different things are going to actually work. When you talk to your tax professionals about this right now, understand that we're all in this industry basing our answers based on what the law says right now.
Right.
But that these other two pieces don't exist yet. And so it could change.
And what else could you do? Like, honestly, that's all you have to do.
Yeah.
What's known now. Yeah, for sure.
Unfortunately, there are places out there that, do have psychics on staff at their tax preparation place. There's actually a meme going around right now that has nude psychic readings and tax preparation. So if you can find that business, they can tell you what the tax laws are going to be for this year. I'm not sure the rest of it, so we won't go into the rest of their services, but most of us are not psychic, and so we just don't know how this is going to play out.
Of course not. Of course not. And if anyone is feeling a level of frustration now about your specific situation, you can book a free consultation with Julie. Just go to the Contact Us button on the Facebook page for Spark Accounting Solutions. Click that, and you'll be taken to a place where you can schedule a free consultation with Julie just to talk about your specific situation. And I know we just kind of did a broad stroke, broad stroke. I always get that wrong. A broad, you know, whatever. What's the right cliche that I'm trying to say?
I don't know the right word either. So
okay, but anyway, bird's eye view of what's going on, but that doesn't apply to everyone. And so you can book your free consultation just by going to the Contact Us button on the Facebook page and talk directly to Julie. And Julie, with that, what are your parting thoughts, words? I like how you're trying to keep us all calm, but
I think, yeah, parting thoughts is most people are actually projected to come out ahead in this new tax situation. There are people that are not going to. There are impacts to individual returns, to business returns, et cetera, that may not be beneficial for you personally. Most people are coming out ahead. Most preparers are trying to give people some idea of what their taxes might have looked like this year if next year's law is applied. So definitely, as you're going in, finalizing your tax returns, ask those questions. If you do have questions and need a consult, feel free to reach out. We don't do a ton of taxes, but if we can understand what your situation is, we can help connect you with a different tax professional if we're not the right people to help you. But ultimately, we just want small business owners to be able to minimize their tax liabilities and take advantage of these new rules where they can.
Excellent, excellent, excellent. Thank you so much for your time today, Julie. And thank you to all the viewers for joining us. If you have any questions that you just want a quick answer to, go ahead and leave them in the comments and Julie will hop back in to answer those. And with that, Julie, we are out. Thank you so much and happy spring.
Hey, have a great rest of the day.